Good evening, friends. You might have heard of situation where you cannot trade because the stock hits its upper circuit or lower circuit. So what is a circuit limit? That's we are going to discuss in today's video. So when we trade in stocks, when the trading in stocks is going on a particular day, if the stock falls down 50%, the investment of a individual will become half, and it will drive away the investors from the stock market. So what SEBI has done is that it has put a circuit limit for the stocks. That is circuit limit on trading, circuit limit on the buying and selling. So when the stock reaches this circuit limit, the trading stops. So circuit limits are implemented to protect the investors from making heavy losses. So the exchange will give the circuit limits as 2%, 5%, 10%, and 20%. So the usually followed circuit limits are 5%, 10%, and 20%. 2% is only for penny stocks, and they are a few in number. So let us understand the circuit limits with an example. Suppose the AB stock price is rupees 60 and the circuit limit is 5%. So as soon as the AB stock's price reaches rupees 63, it hits the upper circuit and the trading stops. And in the same way, as soon as the AB limited stock's price reaches rupees 57, it touches the downward freeze limit and the trading stops. So this is the example if the circuit limit is 5%. If the circuit limit is 10% and the stock price is rupees 60, as soon as the price reaches rupees 66, it touches the upper circuit and trading stops. And as soon as the price reaches to rupees 54, it reaches the lower circuit and the trading stops. So there will be two aspects, the upper circuit and the lower circuit. Imagine there is a strong positive news for a particular stock. Then day before yesterday, the stock will hit 5% upper circuit. Yesterday also, the stock will hit 5% upper circuit. And today also, the stock will hit 5% upper circuit. So the stock will trade from circuit to circuit to circuit. So the stock will keep on hitting the upper circuit for so many days. So this will happen when the trading volume in that stock is low and the stock has usually will have a positive news. So this is also possible. And one more thing to remember is that for derivative stocks, that is those stocks which are included in futures and options, there will be no circuit limits. So usually for the top Nifty 100 stocks, there will be no circuit limits because they are in F&O, they are in futures and options. So totally there are 188 stocks in futures and options, and for these stocks there will be no circuit limits. So when you are trading or when you are investing, you should be aware for which stocks there are circuit limits and for which stocks there are no circuit limits. And also you should be aware what is the circuit limit for each stock. Because when you're investing or when you're trading in a particular stock, you should be having thorough knowledge about that particular stock. Not only about the fundamentals, but also about the trading, how it trades. Because if the stock hits the lower circuit and if the stock is having some negative news, then you will not be able to sell it. Because lower circuit limit is a situation where there are only sellers and no buyers. Obviously, when there are no buyers, you cannot sell the stock. So you should be knowing which stocks are there in the circuit, which stocks are not in the circuit. Thank you.